group accounting. Okay, very detailed, yeah, because group accounting ni actually banyak. First half of the semester till the end too is all on group accounting. So there's so many areas to cover, and I do not want you to miss out anything. All right, the pages that we are going to refer to from the 9th edition is all stated in that checklist. And those of you are still using the old edition, yeah, you can still use it, all right, provided it is probably the 8th edition, okay, 8th, I think 7 still okay, but if you have the 8th edition, then that will be good enough, all right. Okay, so you need to have your textbook ready in front of you as well. Okay, so let us begin. Yeah. Okay, if you look at your Google Classroom, okay, these are the list of things that I have provided earlier on. Okay, this is the course notes, right? And in here there are illustrations. All right. So I have given the notes, okay, and the notes are actually divided into 2 parts. Okay, the notes are divided into 2 parts. We have part A, part B, part 1 and part 2. Part 1, all right, will cover just the basic first, okay, introducing to you what is a business combination, what are the various types of business combination. And then we start to focus into group accounting, all right? And from there, we will look into standards, the standards related to group accounts, which is MFRS 3, MFRS 10. All right, these are the very important standards. You have already learned so many standards. All right, we've already learned about MFRS 138, MFRS 140, MFRS 136, 116, 102. This is another standard. Yeah, one's MFRS 3, MFRS 10. All these are related to group accounting. All right, and of course, you have MFRS 136 because of impairment. Okay, and up to here in part 1B, okay, I will only cover areas relating to acquisition, okay, acquisition of the subsidiary on preparation of the consolidated or group accounts on the date the subsidiary is acquired. Now, when it comes to part 2, okay, this is where we will cover the various adjustments, yeah, relating to group accounting. That means after the acquisition date, all right, onwards, there will be transaction going on between a parent company and the subsidiary companies, all right, and so we need to do some adjustment to the group accounts. Okay, all right, so basically you have already been introduced a little bit, just at the tip of the iceberg, on consolidation. That is when you do investment properties. All right, remember when you did investment property, you have a situation where there is a parent and a subsidiary. All right, so we have the parent company, we have the subsidiary company. In the individual account, each party keeps their own records. Yeah, they each keep their own accounting record. So of course, when the parent, okay, rent out a building, okay, to a subsidiary for the purpose of rental income or capital appreciation, right, say for rental income, then in the parent own book, it will record the building as its investment property, right? Okay, because you are renting it for the purpose of earning rental income. But when it comes to group account, the situation is different. All right, the accounting situation is different because the parent will no longer be allowed, all right, under the standard, which standard? MFRS 10. All right, to recognize that as its investment property, it should be recognized as a PPE. Why? So your lecturer might have informed you, yeah, that because in group account, okay, the two entities, parent and subsidiary companies, they are treated as one economic entity. So you should have been taught a little bit on that part, okay? Explain a little bit. So with that, yeah, you are going to see how consolidation is done based on that principle. And here I also give you illustration, all right? Illustrative example 1 and illustrative example 2, the most basic form of consolidation, okay? And then this is the format, okay? The format for you to do your consolidation. And then this is the summary of basic group accounts in terms of its adjustment, all right, from A to Z, all given in the summary, which you can refer to. Okay, you can use this as your reference every time you do your consolidation questions. Okay, and the other part of my Google Class notes is that I gave you this one. Okay, additional materials. Okay, these additional materials I got it from the YouTube. Okay, some of these three, 1, 2, and 3 here. This is from the lecturer from another branch. All right, she came out. So you might want to hear, okay, explanation given by another lecturer. All right, it's all the same thing. All right, but maybe in terms of explanation, you might be able to pick up something else from here. Okay, and I also pick one YouTube video from this IFRS 10. Now, IFRS, okay, and MFRS 5, they are equivalent, okay? All right, they are equivalent because MFRS actually adopts, okay, the standards from the International Financial Reporting Body, all right? So they adopt this IFRS. So basically what is mentioned here by this Sylvia, yeah, Sylvia, all right, is very much representing MFRS 10, okay? So this you can, I give this to you so that you can watch it at your own free time, okay, to enhance your understanding. So for my side, okay, on my side, I will not have any recorded video, okay? I don't have to record this because there is already a recorded video, all right, from the YouTube. Okay, so I'm gonna begin now, right? Okay, so I will okay, let's take a look at the checklist here first. Okay, so these are the areas that we are going to cover, right? I'm going to introduce to you the basic introduction to business combination, okay? And then we will go into, all right, preparation of the consolidated statement of financial position. So we do this statement first, all right? We do all the adjustment relating to this preparation, this statement. Once we are done with all this adjustment, you see there's so many adjustments here, all right, until bonus issue, yeah? Then we will go into the preparation of the consolidated statement of profit or loss. Okay, so that's what we're going to cover, right? So let's start. Okay, so the title is Business Combination, all right? Introduction to Consolidated Financial Statement. Okay, all right. Now, if you go to your textbook, okay, you turn to your textbook chapter 9. Okay, you go to your textbook here, chapter 9. All right. Okay. Under the topic of business combination. Okay. You can see, you can read from there. Yeah. It mentioned something about business combination. You can read that later on. Yeah. So a company may wish to expand their business by acquiring another business entity. All right, so this is known as a business combination. All right, what is a business combination? Basically, it's about companies, yeah, a company, okay, desire to expand its business externally. This is not internal, but externally. How? By acquiring other business entities. Okay, so MFRS 3 define a business combination as transaction or other events in which acquirer obtain control of one or more business. All right. So there are so many reasons why this business combination takes place, why company decided to expand the business. All right. One is to enjoy the economics of scale. So I'm sure you know when you take economic papers, okay, you've been introduced to economics of scale, right? What is it? Anyone knows what is economics of scale? What's the benefit? Anybody? It's basically about, if you are able to produce in bulks, right? In economics terms, you're able to produce in large numbers, you're able to reduce the cost. Okay, so this is what happened in this kind of business combination, all right? When they acquire, they become bigger, okay, they're able to reduce the cost, yeah, of the product, okay? To minimize or reduce competition and becoming more competitive. Okay, so that's another reason, reduce competition, right? To use resources more efficiently, to raise additional finance, to diversify and spread their business risk. Okay, so these are among the reasons for business combination. Now, let's look at the forms of business combination. Like I said, company desire to expand the business. Okay, so these are some of the common methods. All right, one is called amalgamation. And amalgamation is where you have, for example, company A, company B. All right, A and B. So when A and B decided to combine their business, they will have to wind up, wind up the whole business. Business A and business B will be closed, and then they will set up a new company called business C. Okay, so business C, a new company, all right, which will take over the businesses of A and B. All right, so the assets, liabilities of business A, B is transferred to this company C. All right, basically C is not actually a new company. All right, technically it's not new, okay, because in C, all right, you will see the board of directors and so on are from A and B, right? So what is amalgamation? Is where two or more companies combine the business by selling their assets and liabilities to a newly formed company. All right, so the old company AB becomes a new company known as AB Berhad. Okay, so A and B will be liquidated. That is amalgamation. So this business combination for amalgamation will not be tested in the topic for group accounts. It has nothing to do with group accounts. So you just need to understand, okay, just the theory part of it. Okay, the absorption. What is absorption? Absorption is when you have company A and company B. And you see there, equal to A. What does that mean? It means that company A will absorb, okay, the business of B. So B will be liquidated, all right, and you have only A. So this is more like what? Monopoly, okay? A company A is the monopoly company, all right? So it want to reduce the competition, yeah? Maybe A, B are both doing the same kind of business. So A being the dominant company will take over company B, okay? So B will be liquidated. So A becomes the monopoly company. So that is absorption. And then we have the third type, okay, which is the takeover. This is what we are going to focus on, all right? So here we have company A and company B, okay? What happened is that, okay, the company A here will acquire the right to control company B. How is it done? By acquiring majority of the voting share of company B. Okay, all right, so I repeat, yeah, A and B are two entities. Okay, A will acquire right to control B How does it acquire the right? A will acquire majority of the voting shares. Okay, what is the voting shares? Voting share is the ordinary share. All right. So kalau A acquire majority of preference share capital B, there is no control. Control only exists when the company acquire the ordinary share, because it's only ordinary share that has voting rights. Okay, so you have already learned this, yeah, in your earlier FAR papers, I think. All right, in group accounting for companies. Okay. All right, so when A acquire control in B, you can see that B still exists, continue to exist, and B will become the subsidiary of A. Okay, all right. So this will give rise to parent and subsidiary relationship. Okay, right. So with that, okay, we move on to, all right, related standards. So remember, yeah, we are focusing only on this. Okay, this is our focus, right? So parent subsidiary relationship, and what are the standard that we are referring to? MFRS 3, MFRS 10. These are the two important standards. Okay, right. So MFRS 3, MFRS 10, but of course there are other standards involved. All right, this is when you have other forms of investment. Okay, so when a company invests in the ordinary share capital, all right, and it leads to control, then you refer to 3 and 10. But if it doesn't lead to control, then you refer to the rest of the standards. So all these standards are related when it comes to, okay, the topic of business combination. So depend on what type of investment. Okay, so what is MFRS 3? MFRS 3 is where the definition of business combination is. That is where goodwill, okay, non-controlling interest, identifiable asset and liabilities, okay, is defined. But it does not describe the consolidation process or procedures. Okay, so you want to know about the consolidation part, you have to go to MFRS 10. Okay, MFRS 10. And this standard, all right, will define control. This term control very important, yeah. All right, when it comes to consolidation, there must be an element of control. Jadi awak kena tengok ada tak control. Kalau tak ada criteria control, then do not do consolidation. Okay, all right, and it also gives you the steps, all right, in the consolidation, and it also tells you when a company should be exempted from doing consolidation. All right, when is an entity exempted from consolidation, or when is the parent company exempted from preparing consolidated accounts? Okay, all right, okay. So more explanation on that. Okay, now we look at key definitions. So these are some of the important definitions, okay, found in MFRS 3, okay, found in MFRS 3, okay. So I've already given you that standard, you can look up, all right. So one business combination, already look at that. Okay, we look at the term control. Okay, what is control? Control is when an investor controls an investee, all right? When the investor is exposed or has rights to variable return from its involvement with the investee, and has the ability to affect those returns through its power over the investee. All right, so that is the meaning of control here. Okay, so control is when the investor is exposed. So this is one. Okay, one of the criteria for control. Has rights to variable returns. That's number 2. Okay, from its involvement in investing. And number 3 is the ability to affect those returns through its power over the investee. So these 3 elements must exist for it to have control. Okay. All right. Business means an integrated set of activities and assets that are capable of being conducted and managed to provide returns such as dividends and cost savings. Okay, acquisition method. All right, acquisition method is a method, all right, when you want to do consolidation. So in consolidation, a business combination must be accounted for by applying this method. All right, so there are few steps involved. Okay, the first step is you need to identify who is the acquirer. Who is the acquirer? That's the first step. All right, okay, the acquirer, is it H or S? Who is the acquirer? All right, because sometimes even though H seems to be acquiring the shares in S, acquisition is through a share exchange. Okay, through a share exchange, you will see that the acquirer is not H but S. So we call that a reverse acquisition. So it's very important to identify who exactly is the acquirer. But you don't have to worry so much. You just know the theory part. Okay, because for your level, all right, determination of the acquirer is very easy because the payment is in the form of cash only. Alright, tapi awak cuma perlu faham teori dia saja. Okay, when it comes to the technical part, the calculation part, okay, all the consideration paid by the holding to acquire the ordinary share capital, the subsidiary, is in the form of cash. So it's very easy for you to identify who is the acquirer. Okay. Step number 2 is to determine the acquisition date. All right. So the acquisition date here refers to the acquisition of the ordinary share capital, because this is the one that gives you the control, all right, through the voting rights. Okay, so the acquisition date is very important. Okay, step 3 is to recognize and measure the asset, the liability, and also the NCI. NCI here refers to the non-controlling interest. All right, we'll take a look at what is NCI later on. Okay, and step 4 is to recognize and measure the goodwill, okay, on the business combination or the bargain purchase. So here we have to do a little bit of calculation. All right, so if it is a goodwill on business combination, okay, remember you go back to your MFRS 138, right, your IA. Okay, what does this standard say? This standard prohibits the recognition of internally generated goodwill. If it is internally generated, the standard prohibits. But if it is an acquired goodwill, how is it acquired? Through this business combination, This is your acquired goodwill. Yes, you can recognize this as your intangible asset. So we need to compute that goodwill. We need to calculate, and there is a formula to calculate that goodwill. Okay, but sometimes the acquisition leads to a bargain purchase, not a goodwill. So how do you account for a bargain purchase? What is a bargain purchase? All right, so that is what you're going to learn. Okay. And then you need to know what is this consolidated financial statements. All right, consolidated financial statement refers to the financial statement of a group, right? Of a group in which the assets, the liabilities, the equity, the income, expenses, and cash flow of the parent and its subsidiaries. So parent plus subsidiary, okay, will form a group, okay, are presented as those of a single economic entity. So that means, in this case, okay, in group accounting, all right, before we do the group financial statement, right, each party will prepare their own set of financial statement. Okay, this one also have its own set of financial statement. All right, and then later on when we do group account, the holding company, the parent, okay, will combine, all right, its own financial statement with the financial statement of the subsidiary to form a group account. So that means this group account is prepared as if it is a single economic entity. So because of this, there is an implication, all right, an implication. The implication is that, okay, after the acquisition date, all right, the two entities, okay, the subsidiary and the parent, yeah, they will definitely have transactions. They will definitely have transactions going on between them. Subsidiary may be selling to the parent company may be giving out loan to the subsidiary. The subsidiary may also be selling its product to third parties, outside parties. Okay? Parent may also be doing the same. Parent may be selling to the subsidiary company and at the same time selling to third parties. All right, so there's so many transactions going on. All right, okay. So when it comes to group accounts, okay, you'll see that the two entities are treated as one single entity. Nah, dalam box ni, it's considered as one single entity. So apa maksudnya? Ini bermaksud if there is any transaction going on between them, you have to do cancellation. You have to remove it from the account. Okay, now you have to X, you have to tolak, you have to minus. But the transaction of the entities with outside parties, you see the arrow going out with outside parties, this one maintain. Okay, so in other words, all right, the group account akan menunjukkan transaction of the group with outside parties only. So dalam group account hanya menunjuk transaction of this group dengan orang luar sahaja. So anything between them you must. So this is where you're going to go to part two of the notes, okay, where we look into elimination or adjustment for intercompany transactions. All right. Okay, that's very important for you to understand. Okay. So what is a parent then? How do you define a parent company? It is an entity that controls, okay, the other entity. What is a subsidiary? A subsidiary is an entity that is controlled by another entity. All right, S is controlled by P. All right, and according to the Companies Act, yeah, all right, it is also a subsidiary of another subsidiary, meaning that, okay, S will have another subsidiary, okay, control, all right, S control another subsidiary. So if S control this S1, then automatically S1 will be controlled also by P. So S1 will become a subsidiary of P. That is what it meant, yeah. So subsidiary ni, okay, can be a direct subsidiary, okay, and can also include the indirect subsidiary. Okay, so that is the definition of subsidiary. But for your level, you don't have to worry about, okay, you need not worry yourself about the S1. All right, we only deal with one parent and one subsidiary, which is directly controlled by the parent. Yang macam ni, kategori macam ni, awak akan belajar apabila awak pergi ke degree. Okay, you will learn this in part 5 degree. Okay, under FAR 620, all right, which currently I am teaching. Okay, so your knowledge in your diploma here will be very useful, okay, when you go to degree. So you can keep all these notes, yeah, in case you pursue your accounting degree in accountancy. All right, these notes will remain useful, all right, unless ada perubahan to the standards lah. Okay, right. What else? Okay, this one, non-controlling interest. Okay, let me remove this. Okay, who is this non-controlling interest, right? Who is this non-controlling interest? Yeah, non-controlling interest. So we use the short form. You're allowed to use the short form, yeah. NCI is the portion of equity. Portion of equity. You see, they use the word equity. Dia tak kata portion of liability. Ya, it's the portion of equity ownership in the subsidiary that is not attributable to the parent company. So, meaning to say, okay, if you have a parent company who invests in the ordinary share capital and then they acquire, let's say, 60%. Okay, ordinary share capital of S. Alright. Kemudian ada another 40% of the ordinary share capital of S. Alright, which is not held by the parent. Yeah. So these will be held by another group. We call them the NCI. Okay. So the other 40% of the ordinary share capital of S not held by the parent is held by the non-controlling interest. So that is the meaning of NCI. Do you understand? For now, do you understand? Okay. So these NCI, they don't have control. All right. And even though they are the outside equity holders, yeah, of S, now here you can see the parent company, okay, must present the non-controlling interest in its consolidated statement of financial position, not only in the statement of financial position, yeah, but also in its consolidated statement of profit or loss and consolidated statement of changes in equity, as well as the consolidated statement of cash flow. Maksudnya tadi dalam kesemua consolidated financial statement perlu ada menunjukkan the NCI interest. Okay. But for now, okay, under FAR 320 your code, yeah, you don't have to worry about the consolidated statement of cash flow. Yang ni awak akan belajar bila masuk AC 220. Okay, FAR 620. Okay, so the focus now is only on these financial statements. Okay, so the NCI must be presented by the parent. So even though NCI here is not part of the group, dia bukan sebahagian daripada group. Group means what? P and S only, yeah. This is not part of the group, but still MFRS 10. Okay, this standard says the parent must include the NCI share. Okay, kat mana, bahagian mana of the financial statement? All this format, all this are already used as well. Yeah? Okay. This one is going to be extracted from MFRS 101. Okay, 101. This is another standard on the presentation of financial statements. Okay, so you see the consolidated statement of financial position. Okay, there are things that we need to take note. Mesti awak ambil perhatian, ya. Okay, this is okay, I don't know how to do this, but anyway, alright. One thing is title. Alright. Dalam grup kalau consolidated statement of financial position, the name of the company, dia mesti ada group. If you put the name group, otherwise it's wrong. Alright. Plus consolidation. Alright. You are not parents for the parent company, you are parents. So nama tu ada. Okay. Alright. And statement, the name statement juga mesti ada consolidated. If you don't have them consolidated, you are not preparing a good account. You are preparing an account for an individual company. Okay, right. So thinking about the NCI earlier on, okay, you see here the non-controlling interest, right, is disclosed as equity under the equity portion. Tetapi separate from the shareholders equity of the group. So this is the group. Okay, the share capital, the as other reserves represent the equity of the group, which is PPS. And NCI is disclosed separately from that. So very important. Please note this. Right. So I have done study with some of the key definitions, but if you want to learn more about other definitions, you just look up MRS 3 and MRS 10. Okay. Right. So remember earlier on I mentioned the word control. Okay. And remember earlier on I mentioned this word control. Okay. Right. So for the parent to consolidate the subsidiary, real estate control, what is control? Let's take a look at employment control. So sometimes they give you the summary, you can make up the summary yourself. So I'm going to go straight. So there are three elements of control. There are three characteristics of control. Okay. For an entity control another entity, number one, there must be power over the necessity. Okay. Have power, majority people rights, potential rights to direct relevant activities to appoint or to remove the key personnel. So when we have the power, when you have power, right? You have power, you have majority people rights. Okay, you also have potential rights. Then what you have potential rights. Okay, majority people rights. Here is through the acquisition of the ordinary share capital. And when you say majority, how much is majority? It has to be more than 50%. Okay. Alright, and with that power, you are able to direct the relevant activities. What do we mean by to direct relevant activities? What are relevant activities? Let's look at that. Okay, the meaning of relevant activities. Okay. So relevant activities are activities of investors that significantly affect their returns. Okay, so that is the main revenue generating activity. Yang mana activity yang contribute significantly to the revenue of this company. Okay, so for example, selling and purchasing goods and services, managing financial assets, research and development of products and services. Okay, right? Or establishing property capital relationship. That kind of activity, and then one type of business. Okay, so if you have power to direct those relevant activities, okay, you will have control. Another one is to appoint or to remove the key personnel. Alright, so if you are able to appoint or remove a majority of the, let's say, members of the board of directors, especially those key personnel, right? Like chairman, CEO, and so on, right? Okay, that means you also have control. Okay. Right? However, in certain situations, power can also exist without majority people. This is called effective rule and exist in the yang ni pun awak feels saja ya dalam soalan in your exam questions, alright, the existence of power of rule is when more than 10%. Okay, dia akan bagi awak situation is less than 50% and ask you to decide. Alright, ada control. This one is basically dalam awak dan dalam bentuk years later. So you read the real okay, but I will go into this afterwards. Okay, now we look at the second characteristic. Exposure or rights to variable returns from the investment. Okay, what does this mean? All right. What are the rights to variable returns? What are the variable returns? Variable returns is the investor's ability to use the power over investors to affect the amount of the return from its involvement. What are those returns? Returns being in the form of dividends. Right? So if the investor is doing well, okay, but they make a lot of profits, they have enough cash, they might want to distribute dividends. And the investor, okay, have power to decide how much is the dividend that we will get. Alright? Okay. Other returns with fees, alright, or it can be exposure, loss provided by support, remuneration, okay, and so on. Alright? So that is returns. Okay. And the third criteria is ability to use this power to affect the return of the investors. So they use this power, okay, to decide on how much return they can get for the investor. Right? Okay, so that is control. Okay, that's the meaning of control. Okay. So we move on to the next one. This is one I was talking about qualitative control. Okay. So how about the majority of voting rights can happen provided the following situation exists. Okay, right, this situation. Okay. So number one, there must be a contractual agreement existing between the investor and the other investors. Okay, so for example, right, we have assets here. Okay, and there are so many assets. Okay, we have investor A, investor B, investor C. Okay, so the share capital as you understand that out of the understand this one only say 40%. Okay, the others are holding 30%. 30%. Okay, so we know here who is going to be the one preparing the consolidated accounts. Alright, because none of them, okay, have a majority voting rights. Okay, yes. Right? So it cannot say, oh, I am better because I will most percent, but you cannot. Alright, there is no sufficient evidence, okay, to show that we have this power. Alright, because your interest rate is less than 10%. However, if there is a contractual agreement that exists between A, B, and C, alright, whereby B and C agree, agree in the contractual agreement to have A, alright, to grant A the power, alright, to direct relevant activity of the subsidiary of this company S. So A is that you have control. Okay, so A will come the parent company and A will be the consolidation. Alright, so you have to look at the contractual agreement. If there is contractual agreement, then you have to look for the existence of other facts and circumstances to show that the investors have this ability. Alright, so one is potential voting rights. Okay, the existence of potential voting rights. So what are potential voting rights? This is one example here. It's like options, warrants, okay, which can be converted to ordinary share capital. Alright, at a specific time period. Okay, option and warrant, right? these are financial instruments. Okay. Again, don't have to worry about this. And just this one's basically when you agree. Okay, then learn in detail about option or financial instruments. So you just have to remember. Okay, this is subsidiary S. Okay, and option and warrants. All right, and this is company A. Okay, invested in this option warrant, and this is options or warrants can be converted into ordinary share capital and related that will increase. Okay, increase persennya akan menjadi lebih tinggi. Alright, dia lebih tinggi. Okay, more than percent tadi. Ini become the company and they will consolidate because dia ingin mengatas result of conversion of this option warrant, then the share capital percentage held by the entity akan kurang resources that increase. Okay, so ini other example of potential warrant like your convertible preference share or your convertible debentures. Yang awak belajar ever learn about convertible preference shares, the different types of preference share capital and debenture? Yes or no? Have you ever heard of this? Right? Okay. You have convertible preference share, renewable preference share. Okay, semuanya awak tahu lah ya. Sebenarnya awak belajar ya. Ada lain So convertible preference share atau non-convertible debentures okay, preference shares that can be converted into ordinary share capital at a certain period of time. Okay, there is a certain period of time and development option converted. So when let's say investors in convertible preference share capital S and they exercise their rights to convert this into a share, it will increase, okay, the percentage of ordinary share capital held by S, and it will reduce, okay, the percentage of shares held by the other investors. That will result in it becoming the parent necessary with control. Right? So okay, existence of potential shopping rights. So you can actually refer to your textbook on page 309. Alright, okay, your textbook, you just go to example 1, example 2, and example 3. Alright, okay. So example 1, 1, 2, 2. This example. Let me just read example 1, 1, 2, 2. Alright, it says investors Z and E each hold 60% and 40% of voting rights. Okay, of an investor. So example where we have investor A and investor Z and E. Okay, so it's 1, 1. Alright, so we have 2 investors. Okay, one holds 60% and the other one holds 40%. Okay, 60% and 40%. Alright. Okay. And investor E has the option to acquire half of the voting rights in this person. Okay, as the rights. Okay, to the option of as any other option. Okay, as the social option, and this person for the option. Okay, and this option, okay, it gives me the right to acquire half of the share of the one. So kalau dia exercise option, then this one will reduce by half. So it will become 50%, and this one will now become 70%. Okay. So the option exercise that is not economically beneficial for he exercise option. currently president is exercising the rights and actively directing the relevant activities of the investee. So allow BCP below the exercise the option because it's not normally do so. Then of course A will have to access. Alright, but if this company decided to exercise the option, then this is what will happen. Okay, the share capital of A will reduce to 50%, and the shares held by this company will increase to 7%. So 2 is the parent now. So in this case, the parent is B and right? That is the effect of actual rights. Okay. And the same thing goes with example 2. Yeah, investors SNU hold 1/3 of the rights of investors XE. Investors XS holds virtual debt that can be converted into ordinary share. So investors S and XE business are closely related. So if that is converted, S will drop off 65%. So S will benefit from the theory that assets negative benefits from business. So we can conclude that S has our over investors XE by virtue of shares held and the potential voting rights become substantive. Okay, so in order for this to happen, okay, these potential voting rights must be substantive. Okay, so the rights to be substantive. So typically, the rights has been exercisable. Okay, right. Typically, during the time, okay, they are able to exercise their rights. Only then, okay, we can say that this potential voting right has substantive rights and is going to lead to this situation. Okay, so this is okay, awak cuma tahu theory saja. Okay, this is no theory. When it comes to the calculation chart, I don't want to confuse some this is very direct. Okay. So the other one is okay, this one and the background of the third point, ownership of voting power relative to the size and dispersion of voting with other holders. Okay, this is also very important. Like case we see earlier on, now we have A, B, and C, right? Okay, we have each one have shares less than 10%. Okay, but one party have a share that's slightly bigger back the rest. So how is this going to affect? And we say that it's versus has group. So again, if we look at your textbook, example 3 and 4, and let's just now Sampe holds 40% of the voting rights of RAM. 10 other shareholders each hold 6% of the rights. But there is no contractual arrangement on stopping any of the others or member decision. Okay, so how do we decide? Can we say that one person with the highest share capital will be there? So here the answer is the absolute size of Sampe holding and the relative size of the other shareholders alone is not sufficient to determine if Sampe's power will rise. Okay, you have to look for other factors and evidence that is needed to determine what are the other factors. We say this now, contractual agreement, potential voting rights. Okay, so because the reason is that, right, other shareholders who are holding less share, they might come together and make a collective decision to uphold the decision of the shareholder having relatively bigger share. Right, so that is why we cannot assume that you having bigger share, you are no, you have other factors like that you are more the existence of potential voting rights. So you can go to example 2 with more. Okay. Alright, so let me just finish off the group structure. Yeah? Okay, so now we go to group structures. So there are various types of group structure. We have the single level. Okay, the single level is when you have only and subsidiary. This is called a single level. Alright, with only one subsidiary. Then you have the more complex structure. Complex structure is when you have more than one subsidiary. Alright? This is called the Federal subsidiaries. Alright? So this one will be not single element, not single element. This is more complex. Okay? So this is still under the level. Why is it the level? Because both subsidiaries are directly under the holdings. Alright, that is called a complex group. This is called a simple structure. Okay, so a simple structure having a single level one subsidiary here, a complex structure, alright, having more than one subsidiary directly under the holding, and this is called parallel subsidiary. Now there is another type of group structure. Okay, we call this the vertical group. Okay, so we put this under complex. Okay, complex structure. So we call it vertical form. Why? Because the holding, okay, has a direct subsidiary. Okay, direct control over this. This subsidiary also has another small subsidiary. Okay, it also has control over this subsidiary. Alright. So we have subsidiary, we have intermediate parent, and we have the ultimate parent. Okay. So under this, who is the parent? Who do the consolidation with this is ultimate parent. So we call this vertical group structure. There is another type. Alright, we call it the mix. Under the mix group, we have holding having a direct subsidiary. Okay, 60% controlling this one. Okay, S1 also has control or interest in S2. Right? And the holding in this case is having an indirect interest in S2. But the holding also have direct investment in S2. So this is called the mixed group. Okay, but you don't have to worry about all these structures. You just build your theories. But I want to maintain that the theory is structure. We akan tanya, okay, this type of structure one in your exam. Okay, neither is this juga. Okay, will not come out in exam. What will come out in exam is really simple structure. So like what just said in the project. So all those complexity will come out in your when you is easy to do, when you go to is easy to do, you want to complex right? Okay. So that's some structure. Okay, so we'll stop our session here. Okay, and next week, and the week after the break, okay, we will go into the preparation of the consolidated translation. So I would like you to continue watching the videos that I mentioned earlier on. Alright, get to know, a little bit more. Okay, the consolidation, and then you can start reading. Okay, the textbook. Okay, please go to your checklist. Okay, go to this checklist here. Alright, you can start reading one. Okay, prepare yourself for the week after the week come back. Alright. Because after that, okay, they look at your lesson plan, and you're going to have your quiz, okay, on the basis of consolidation. Alright, this was one. There will be a quiz on introduction to business combination. Alright, in week 8. Week 8 is here. Alright. Alright, class.
Yes, Mr.
Ya, okay. Bila kita jumpa after 2 weeks time, we are going into the preparation that is MFRS 10. Right? Okay. So that's all for now.
Thank you for today, madam.
Welcome. All right.
Thank you, madam.
Happy holiday. Yeah.
Happy holiday to you also.
Okay. Okay. Ya, Iza. Dua-dua, degree diploma. New diploma, you will learn about this. Nanti bila you masuk degree, there will be a short revision, lepas tu pergi ke kompleks. Tapi principle dia semua sama. So this topic very important ya. And then you know all the other standards yang awak dah belajar, intangible ke IP, PPE semua tu, nanti bila you masuk, at the moment you enter ya, you akan ada penerapan kan. There will be penerapan, you akan terus masuk ke part berapa ya, part 3 ke? Part 3. You'll be learning all these standards again, you know, under FAR 510. Tapi belum masuk consolidation. Consolidation bila awak masuk part 5, when you come to FAR 620, you are going to do consolidation, full consolidation, tak ada yang lain. Buku teks, saya guna textbook yang sama, Jen Laza. Kecuali jika ada perubahan dalam standard, and then Jen Laza update dia punya buku teks dan kita akan tukar kepada yang edisi terbaru lah. Kalau tak, we are going to use the same one, the 9 standard. The MFRS, semua tu penting. Yang MFRS saya bagi tu, itu adalah rujukan yang penting, especially bila awak ke bahagian degree. Even sekarang, it's important because some of the example yang saya quote tadi, yang saya mention, those are all from the standards. All those definitions, semuanya daripada standards. Jadi kalau awak nak faham betul-betul, baca the standard. Tak faham. Okay. You have a point there because this is the first time they are introducing, bukan first time, last semester adalah first time they introduce kan. Jadi kalau awak cari soalan degree memang dah high level lah tu. Too high. Too high because they are complex. Yang group structure saya tunjuk tadi, remember I said the vertical, the mix, the fellow, those are complex, those are high level. So there is no question which cater for this one. So what you do is, you just have to do question from the textbook. That's why saya tanya tadi, siapa yang tak ada textbook? The only way is for you to do question daripada buku teks. And then saya akan bagi modified question. Macam tu lah. Okay. Iza, how is your, kalau awak tak, if you don't mind lah, you punya CGPA macam mana? 3 point berapa? Oh, that's very good. That means you have a very high chance to go to AC220. Penerapan, I rasa tak ada lah. Of course there is a quota, but I think they will give chance to penerapan student lah. So with your kind of result, okay, I don't see any problem in you being accepted to AC220. It's because your CGPA is very, very strong. It's very strong, all right. That's why you have to make sure muat tu kena ambil. Very good, okay. And don't miss the opportunity nanti bila dia announce penerapan tu, awak kena buat cepat-cepat. Yelah, nanti dia akan there will be an announcement, right, for student to apply for penerapan kan. Okay, so don't miss that and make sure transcript semua dah get ready, okay. Right, because I have a case where my own nephew lah, dia lupa transcript and so on. Benda-benda macam tu you have to get ready lah. Transcript yang result nantilah, result ke whatever, you know. That's why when people, when UiTM suruh you guys isi all this UFO ke, whatever entrance, exit tu, buat semua ya. Jangan tak buat. Nanti mungkin ada implikasi bila nak penerapan, nak dapatkan all your sijil ke whatever. Okay? Alright, Izzah. Yang nota-nota macam ni nanti console group account ke standard tu simpan. Boleh buat sebagai reference, ya. Alright. Transcript, I think normally they will look for transcript. Transcript is for whole semester kan. Yelah. Tak apa. Okay, you just make sure you know what is going on lah. Yeah, always check your student portal. Semuanya ada kat situ. Yeah, all the info that is needed is all in there. Alright. Okay, Isa. Okay, very good. Yeah, your result. Alright, so I'm very sure untuk Fatri 20 ni you should be doing very well as well. Yeah. Untuk group account ni very important. You are always up to date. Okay, do not miss any. Kalau miss satu je kelas tu kena apa? You have to follow up on anything that you miss, because everything on group is continuous. Okay, everything that we learn each week tu dia ada relation to the next one. Yeah, they're connected. Alright. So as long as you follow the session, okay, closely, should be okay. Alright. Okay. All right. Bye.